The markets are closed, but the business stories are just heating up. Hello, I'm Robert Tan. Catch up with us on Business Brief. Israel launches what it calls preemptive strikes on Iran, is escalating tensions in the region crucial to global energy and trade. Israel has carried out strikes on nuclear sites in Iran. The strikes were part of Operation Rising Lion. Israel's PM Benjamin Netanyahu says Iran was a threat to Israel's very survival. The targets? Iran's nuclear facilities and long-range missile sites, according to sources familiar with the strikes. Iranian state media reports multiple explosions in Tehran, prompting a temporary closure of airspace over the capital. Israel has declared a nationwide state of emergency, shutting schools and workplaces as it braces for possible retaliation. This marks a major flashpoint for global markets that could affect oil supply, shipping routes, and investor sentiment in the Middle East. The Philippine Embassy in Israel advised Filipinos to stay at home as Israel has placed under essential activity status starting today. This following the heightened security and political tensions between Israel and Iran. The embassy reminds the Filipinos of the advisory issued by the Israel Defense Force Homefront Command, stating that the country is under such status from 3 a.m. of June 13 until 8 p.m. of June 14. There are about 2,000 overseas Filipino workers in Iran and around 30,000 more in Israel, not counting the undocumented. The Philippines and Iran have a long history of science and technology cooperation, with both countries signing an MOU on scientific and technical cooperation in 1964, which was renewed several times, while Israel and the Philippines have a total volume trade of $534 million worth in goods last 2022. Outgoing Energy Secretary Rafael Lotilla warns that any escalation in the Middle East could threaten global oil flows via the Gulf of Hormuz. He notes that despite interruptions in Iraq, Saudi Aramco, and Gaza, oil supply usually returns to normal as alternative sources are tapped. DOE officials project oil prices to remain stable at $60 to $70 in the medium term as global supply-demand dynamics take hold. Asian shares slide on Friday after Israel attacked Iran's capital amid rising tensions over Tehran's rapidly advancing nuclear program. Zhu Tianqian of the Economist Intelligence Unit says that an Israeli attack on Iran poses a top 10 global risk. However, Asian markets are expected to recover quickly as they have relatively limited exposure to the conflict. They also have growing ties with the unaffected countries such as Saudi Arabia and the United Arab Emirates. The conflict has also prompted an increase in oil prices. Both Japan's Nikkei 225 and South Korea's Kospi fell more than 1%. Hong Kong's Hang Seng declined by 0.70%, and the Shanghai Composite slipped 0.72%. In Southeast Asia, Singapore's Straits Times Index dipped 0.49%, and Australia's ASX 200 edged down 0.34%. And in the currency markets, the US dollar is flat against the Japanese yen and the Hong Kong dollar, although it shows a slight uptick against the yen. The Australian dollar weakened, down by 0.78%. The US dollar also rose 0.34% against the Singapore dollar and climbed 0.96% against the South Korean won. Meanwhile, it appreciated 0.27% versus the Thai baht. Commodities and cryptocurrency markets saw notable movements. Gold climbed more than 1%. Oil prices surged with West Texas Intermediate crude and Brent crude rising more than 8%. In contrast, Dubai crude slipped 0.58%. In the digital asset space, Bitcoin dropped more than 2%, while Ethereum declined nearly 5%. The US dollar plunges after President Donald Trump threatens higher unilateral tariffs on trade partners while oil fluctuates. This as traders evaluate the probability behind reports that Israel is gearing up to strike Iran. The greenback is down against the euro, and at one point it fell by more than 1% to its lowest point in 3 years against the European single currency. The site is still smoldering. Rescuers are still combing the wreckage, and the death toll is expected to still rise, pending DNA testing of the victims of the London-bound Air India passenger jet that crashed moments after takeoff Thursday in the western Indian city of Ahmedabad. The airline said 241 people were killed when the Boeing Dreamliner bound for Gatwick came down in a residential area. Senior Indian officials have said 269 bodies had been taken to the main hospitals so far. Of the 242 people on board, including 11 children and 12 crew members. Among the passengers were 169 Indians, 53 British people, 7 Portuguese citizens, and 1 Canadian. Only a British national survived in what is considered the world's worst aviation disaster in a decade. President Ferdinand Marcos Jr. has his deepest condolences to India in a recent post on X. U.S. transport officials have dispatched a team to India and that more resources could follow depending on what investigators find. U.S. officials say there's no immediate need to ground Boeing 787 planes following the deadly Air India crash that killed over 200 people. Transportation Secretary Sean Duffy and Acting FAA Chief Chris Rocheleau made the statement at a news conference, stressing that safety remains their top priority.
This is very early in the investigation, and so it's not appropriate for speculation at this time on what could have caused the investigation. As the Secretary said, we will let the facts lead us, and we will support the NTSB investigation and, of course, the Indian investigation as well, their version of NTSB.
Shares of Boeing listed on New York Stock Exchange fell sharply in pre-market trading on Thursday, June 12, 2025, declining more than 7% amid news of a fatal crash involving a Boeing 787-8 Dreamliner operated by Air India. The U.S. plane maker even enjoyed the momentum of a record order placed by Qatar Airways during a visit by U.S. President Donald Trump, which propelled its May orders to the highest such tally in about 18 months. We're taking a short break. More business stories from around the country and the world are up next. You're watching Business Brief. After suspending her for 6 months before the midterm elections, the Office of the Ombudsman dropped another whammy against defeated Cebu Governor Gwen Garcia. Garcia was found guilty of indirect contempt for defying the suspension order from the Ombudsman. The seasoned politico who lost her gubernatorial bid to political neophyte Pamela Baricuatro was also slapped with a 30,000 peso fine. The suspension stems from a special permit Garcia issued in May of last year to Shalom Construction Incorporated for desilting operations in the Mananga Rivera protected area, allegedly without an environmental compliance certificate from the Department of Environment and Natural Resources. For misusing 2.1 million pesos in pork funds, former Misamis Occidental Representative Loreto Leo Campos is sentenced to 28 years in prison. The Sandigan Bayan found the ex-congressman guilty of graft, malversation, and falsification for channeling the money to a fake NGO project. Ocampo's 2 NGO partners, Josefina Candole and Jamie Ann Linsangan of the Rich Islas de Filipinas Foundation, also gets prison time, are disqualified from holding public office, and must pay 2.1 million pesos in fines and damages. Russian-born crypto executive Alexei Andriunin avoids more U.S. prison time after admitting to a multi-year market manipulation scheme. The Gotbit CEO, who earned tens of millions annually, was sentenced to 8 months already served. Gotbit must forfeit $23 million in crypto for wash trading from 2018 to 2024. Wash trading artificially inflates trading volume of tokens. The FBI's Operation Token mirrors used a fake coin to expose the fraud. Andriunin now face deportation. Starting next month, the Philippine Stock Exchange will implement a lower stock transaction tax in a move seen to boost market participation and trading liquidity. PSE President and CEO Ramon Monzon says the reduction follows the signing of the Capital Markets Efficiency Promoting Act, or CMEPA. Under the law, the stock transaction tax will drop to just 0.1% from the current 0.6, applied on the gross selling price or value of shares traded. The Philippines slips to 20th in the World Economic Forum's Global Gender Gap Index, losing ground in a key metric closely watched by investors and multinationals looking for inclusive, equitable economies. This marks the 6th straight year the country has missed the top 10, a red flag for companies prioritizing diversity in leadership and workforce inclusion. The index measures how countries are closing gender gaps in 4 areas: economic participation, education, health, and political empowerment. The Philippines scored 78.1% this year, a slight improvement from 2024, but not enough to keep pace with global competitors. Still, the Philippines ranks 3rd in East Asia and the Pacific after New Zealand and Australia, reinforcing its potential as a regional hub for women-led growth. The Chamber of Mines of the Philippines supports the reconciled version of the Mining Fiscal Reform Bill approved by a bicameral conference committee. Chamber of Mines Chairman Attorney Michael Toledo describes the proposed tax changes as balanced and responsive to industry conditions. Toledo says that the shift to a tax regime based on profit margins and windfall earnings is a progressive and responsive approach. This also allows the government to collect more during commodity epicycles. And ahead of a biofuel policy shift in the U.S., agri-giant ADM slashed its soybean purchase prices by as much as 6.5%. ADM is a major U.S. soybean crusher and biofuel producer using soy oil. The shock move signals weakening demand for soy oil, a main ingredient in biodiesel, as blending rules face a cut. This could lower global soy prices, giving Philippine livestock feed producers bigger profit margins. But it also threatens exports of locally produced coconut biodiesel amid a growing glut. Traders say the price drop is the biggest mid-year shift in decades, with wide implications for commodity markets. We're taking a short break. More business stories from around the country and the world are up next. You're watching Business Brief. The Agriculture Department is pushing for a gradual rise in rice tariffs starting Q3 to avoid shocking retail prices and steering inflation headaches. The DA says timing is key as hikes must protect local farmers without hurting consumers. Secretary Francisco Chu Laurel Jr. wants the increase to coincide with harvest seasons in Vietnam and Pakistan, the Philippines' biggest suppliers, to soften the blow on both local and global prices. Vietnam harvests in September, while Pakistan in December, crucial windows that could ease supply pressures as duties climb. A group of health advocates filed a petition to the Supreme Court against the zero allocation given to the Philippine Health Insurance Corporation in the 2025 national budget. Petitioners include former Health Secretary Dr. Jaime Galvez-Tan, academician Dr. Fabian Dairet, representatives of senior citizens and social development organizations, Social Watch Philippines, among others. They question the constitutionality of the act of Congress in failing to appropriately earmark revenues from the sin taxes that, according to them, should be given to the state health insurer. The Department of Trade and Industry wants 200 million pesos annually from 2026 to 2028. This is to fund direct support for exporters after funding from the European Union ends this year for the Arise Plus program. Export Marketing Bureau Chief Bianca Siquijor says the budget will cover certification and market access aid under the Philippine Export Development Plan. The plan targets firm-level aid for 3 exporter tiers, Breakers, Crest, and Ripples to build globally ready brands. Siquijor warns current interventions are too broad and underfunded to drive real growth. Incoming Energy Officer in Charge, Sharon Garin, says all government agencies are on deck to stabilize the power situation in Siquijor following President Bongbong Marcos' visit. She confirms that 80% of the blackouts are due to insufficient supply, with the generation company committed to fixing the generators. Today, both outgoing Energy Secretary Rafael Lotilla and incoming OIC Sharon Garin answers questions from the media. We have this report from Sujin Kim.
Robert, following President Marcos's visit to Siquijor and his 6-month deadline to resolve the province's power crisis, the Department of Energy assured that all agencies are now hands on deck. Incoming DOE officer in charge, Undersecretary Sharon Garin, said the main cause of the recurring blackouts is the insufficient supply from Siquijor Island Power Corporation, or SIPCOR, the island's lone power generator. DOE Assistant Secretary Mario Marasigan revealed that only 5 out of SIPCOR's 9 generator sets were running due to lack of spare parts and delayed maintenance. DOE and the National Transmission Corporation are now reconfiguring the island's grid to ensure all power sources can support each other. Officials reminded SIPCOR that it is contractually obligated to deliver the agreed megawatt load under its power supply agreement. Meanwhile, Energy Secretary Rafael Lotilla stressed that the private sector, not just the government, must be held accountable for system failures. Beyond local power supply, the DOE is closely monitoring global oil markets amid escalating tensions in the Middle East following Israel's strike on Iran. Benchmark oil contracts surged by as much as 10% this morning, potentially triggering another round of fuel price hikes in the Philippines. While a temporary spike is expected, the DOE clarified that supply security is not yet at risk, thanks to alternative global sources. However, any escalation that impedes the Strait of Hormuz could affect supply chains and inflation. Lotilla warned that fuel price increases would impact not just transport fares, but also food and commodity prices due to higher logistics costs. On the nuclear front, the Philippines now has a national roadmap, regulatory framework, and active partnerships with countries like the US, setting a target for nuclear power integration by 2032. The administration is also tapping US LNG exports, with new supply routes set to open in Mexico and Canada between 2025 and 2026, easing dependence on Middle Eastern sources. And those are latest updates from Taguig City. Back to you, Robert.
Thank you for that report, Sujin Kim. Meanwhile, Philippine shares rise for the second straight session after ending in the positive territory in the final trading day of the week. The PSE index ended higher by 0.2% to close at 63.95, finishing the day as the best performer in Asia. Majority of the sectoral indices ended in the green, with mining and oil rising the most at more than 4%. Advancers outpaced decliners 108 to 92. Total value turnover reached 9.9 billion pesos. More than a half of the day's most active stocks ended in the green, with First Philippine Holdings rising the most at almost 14%. Meanwhile, at the foreign exchange market, the peso is currently trading at 55.92 against the greenback, weakening from previous close of 55.89. And that's a wrap for today's Business Brief. I'm Robert Tan. Join us again next week as we bring you the stories that help you plan your next big, bold moves in business, only here on the Bilyonaryo News Channel. See you then.